Avon Resources Limited is a gold exploration company with significant projects in British Columbia and the Yukon, trading on the TSX Venture Exchange, symbol ABN, and the OTCQB, symbol ABNAF. Surrounded by world-class gold deposits and mines, Avon's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at avonresources.com.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Mike Swanson, editor of WallStreetWindow.com. Welcome back to the show, Mike.
Hey, it's great to talk with you.
Mike, are people asking you what should you do if you think you've missed out on the rise in gold?
Well, a few people are, a very small few. One of the funny things, though, about what's happening with gold is that over the last 6 weeks, there actually has been a tremendous explosion in the volume going into the exchange-traded funds. In fact, last week there was one day where GDX had more trading volume, that's the gold stock ETF, than any other ETF, even more shares are trading it than the S&P 500 ETF, SPY. So there is tremendous volume going in. However, most individual investors, at least in the United States, have not gotten in yet. For evidence of that, I would cite Robinhood. They're one of the largest now brokerage firms in the United States, and they will list every single day the 100 most widely owned stocks and ETFs, rank them all by order of the most number of people that own them. And so on Friday, about 4,100 people own GDX, and it can't make the top 100 list. And GLD is like 6,000. And for comparison, Aurora Cannabis has over 400,000 people own it. 200,000 people own Tesla. So the point of that is that there's a weird dichotomy going on where the individual investor in the United States really isn't in gold yet, or gold ETFs or gold stocks, despite the fact that they've gone up or been going up and that the volume is exploding. So that leaves two things to think about. One, where's the volume coming from if individual investors are buying it? And I would assume it's coming from institutional investors, hedge funds, computer robots, and so forth. But the other thing is, and this is reflecting some of these emails I'm getting, is, I missed it, so how can I buy in? And it's really difficult because you want to buy stuff that pulls back to the 200-day moving average, the 150-day moving average, at least consolidates. And so many people, when gold first went through 1,400, were expecting a giant pullback, and it didn't happen. So now, and then it goes up again, and they're caught, missing it. And last week, GDX, went up to about touch 28. There's no real pullback in it. Even today, it's down barely, down 35 cents. But I mean, it's gone up $18 in 2 months. So what do people do? And I think there's two things they can do. One is think of gold and the mining stocks as an investment for a portfolio. And in that way of thinking, you don't need to be 100% invested. You shouldn't be 100% invested in anything. Just take a small position, 10% in gold or 10% in the mining stocks. If you're aggressive a little bit more, and just plan to hold it. And in that case, you don't necessarily need to have this perfect entry point unless you're buying some giant position. But then, if you do want to trade, or take trading type positions, then I think at this point, people have got to stop looking just at the ETFs and even at the big cap stocks, which I like, and I own many of them, and start to look for the stocks that have not really caught a big bid yet. And that's really the small cap, junior mining and exploration stocks. And typically, when gold and the mining stocks go into a new big run like they are started to do in June, what happens is the big caps go up first, the small caps kind of just sit there, and then after a couple months, money starts to go into them. I think because people start to look for what has not yet started to really go up and explode. So that's the place I think we can put, or the listener can, money to work in things that have not yet quite taken off. But so that's honestly that's what I'm looking to do with my own money. I've already got core positions in metals ETFs and big cap mining stocks. I'm not really planning on buying more or trying to trade them in and out or anything like that. In fact, the one thing, there's many things people can do that, many options. I've kind of tried to go through some of them, but I would say something people should not do is buy JNUG or Nugget and try to go into these triple ETFs and try to make a big killing. These things decay over time. Anyway, it's just the way they're designed. They use futures and options, and look to, there's no need to buy them when you got the small cap stocks and go up just as much anyway, and they don't have the decay factors in them at all. So anyway, what I'm looking to do myself is hold my core positions, and as we go forward here, and what I think is going to be a trend that's going to last into the end of this year and really beyond, is look for small cap stocks that have not broken out yet, that have potential, and I'll be, and I know your show, your guests talk about a lot of them. There's a lot of them on HowStreet.com too, and I'll be looking myself for such opportunities.
Now, of course, when you're buying juniors, you better do your research, right?
Oh, definitely, and that's why it's trickier than the big cap stocks. Like with the big cap stocks, it's kind of funny when it comes to the fundamentals and earnings. There isn't a big edge that you can have in really studying that stuff really closely. When it comes to big cap stocks in general, what do valuations matter when stocks like Tesla exist in the stock market? We can go on and on. I mean, the price to sales ratio for half the stocks in S&P 500 is over 2. Valuations have not mattered for years. So you got to use charts primarily when it comes to big cap stocks. But with small caps, that's almost reversed. Charts are good for entry points. You got to look at the price history and figure out where would I put a stop loss order in, or what could I potentially lose in something. I mean, you got to look at the price in that sense. But fundamentals and knowing stuff about these companies is very important, because that actually gives you the idea of what the actual upside potential is. The reason why there's no real edge to knowing that when it comes to big cap stocks is because that information is so readily known by almost everyone in the market already. Hedge funds, money managers, and even individual investors can easily get analyst reports for something like Apple or whatever, and try to, you're not going to know anything more than anyone else, and very few people are going to know more than you. Honestly, the guy watching CNBC and buying Apple knows pretty much just as much about that stock as the talking head with a ponytail does about Apple. But when it comes to small cap stocks, you actually can know a lot about them. You can call them up and talk to the management yourself. You can go to investment conferences and talk to people at them. Individual investors can do that. And if you don't want to do that, then you can rely on other people doing it, newsletter writers, websites such as yours, and so forth. And all that information becomes much more important than simple chart reading. In fact, I would almost say that the chart reading isn't very useful in buying small cap stocks for figuring out which ones to buy. It's useful for figuring out how you may want to get in and out, but not picking them out, so to speak.
We'll have more with Mike Swanson right after this.
I'm Douglas Mason, CEO of Naturally Splendid, symbol NSP on the TSX Venture Exchange. Naturally Splendid is a biotechnology and consumer products company focused on the global cannabis and health markets. Naturally Splendid is expanding distribution in this rapidly growing market with products currently in Canada, the USA, South Korea, Germany, and Australia. To view our comprehensive company presentation and for more information, please visit our website at naturallysplendid.com.
Grand Portage Resources' Herbert Gold Project in southeast Alaska highlights increased gold resource, indicated and inferred, of 860,000 ounces, in excess of 10 grams per ton gold. Expansion drilling is planned on the Herbert Gold property for the summer of 2019. Grand Portage Resources trading symbols are GPG on the TSX Venture, GPTRF on the OTCQB, and GPB on Frankfurt. For more information, please visit our website, grandportage.com.
Welcome back. We're speaking with Mike Swanson. Mike, the U.S. announcing that they're going to resume face-to-face trade talks with China on Monday. I always thought that they were holding the talks all together right now. Did you know that they weren't talking and they're just getting back together again? I thought it was a continuous process.
Well, it's pretty funny, you know. They in May, of course, they had a face-to-face meeting, and it didn't turn out too well. And Trump talked about increasing the tariffs, and then the two sides didn't really speak again until there was that G20 meeting, and they did a trade truce, so to speak, much like they did at the end of December. But evidently, since then, there's been no real proposals from one side or the other. There has been some media stories, particularly out of Chinese government organs, the People's Daily, I think they call it. But there's a website I follow called the South China Morning Post that's geared to English-speaking people that kind of goes over the Chinese statements, and they used their media organs to try to give us an idea, and really the administration in D.C. what it is they want. And at the moment, their basic line is we want the tariffs to go at the same time that we end up making actions that the Trump administration wants, where the Trump administration kind of wants to keep the tariffs and have the Chinese do things, then take them off. So they're at those are the two viewpoints that are clashing with each other. But yeah, so today it's come out that they're going to meet next Monday, as you said, for the first time in weeks. But it seems like we're in a situation that we've been in since this started, in which it doesn't seem to have any real sign that a real trade deal of any sort is coming. And the tactics of China seem to be, let's just delay and hold this off as much as possible. And at that G20 meeting, apparently the Trump administration has come to the same conclusion. Maybe after the 2020 election, they would then do something, more tariffs or something, or the Chinese will deal with the Democrat and try to make a deal with them. So it seems to me like we're in some sort of holding pattern where it's very difficult to expect anything real. And even the news story today suggests that, because it says some Trump officials say a deal is in the long ways out. Well, one funny thing about that is that up until last month, they were always trying to make it sound like a deal's around the corner. Well, now even they're admitting that one is a long ways out, as they're putting it. But the stock market, today is up a little bit on that news. The Dow's up 150. The S&P is up to 3,001, above that 3,000 level. But I don't know if that news I don't think the news means much. And the stock market, has been in a rally now since December. So I just think it's an excuse for people to buy. And as long as the market is in the state it's in, for most people, any excuse to buy is a good excuse. And next week we've got the Federal Reserve meeting, that people are certainly not going to sell into that, in any meaningful way. But honestly, I find it tough, at the moment to try to make much money trading the U.S. stock market because, we've had this big rally since December, and I don't really think there's tremendous upside potential from here. But at the same time, I don't think there's tremendous downside potential at the moment either. And it may stay like that, for several months. So honestly, on my website, my updates, I haven't really been saying much about the U.S. stock market, because I don't really see much profit opportunity in it. But that's okay because gold is really, exciting and the gold stocks are really coming alive. So that's becoming my primary focus, for now to try to help people because I think there's much bigger gains to be made there. For example, one stock that I do own, and it's a big cap stock, is Kirkland Lake, and it's up 9% in about 4 weeks and 40% in 2 months, and up over 150% for what it was in October. It's one of the top gaining stocks in the entire stock market now, and it's a big cap stock. But it's beating the performance of Facebook, Apple, Nvidia, Netflix, all these popular stocks that people have talked about for so many years. And I think that's an indication of how the opportunities now to really make money in the market are shifting into the gold sector, the mining sector, because if gold broke that 1350 level, it's a 4-year resistance level. And when something bases for that long and breaks out, it tends to go up, for quite some time. And so it's an interesting, moment, for sure.
We'll have more with Mike Swanson right after this.
Media recognition from Bloomberg, Reuters, recycling trade publications. Patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Mike Swanson. Mike, I know you keep track of stock markets around the world looking for opportunities. The Indian and Pakistani stock exchanges have had major plunges recently. Is that a concern? Does this eventually come home to roost? Or are people just going to the North American markets because they're still considered to be profitable?
Well, the Indian stock market, it took a big dump last fall, and it's rebounded back up, and now it's off, the recent high of May and June. I don't know what, that those people, I doubt, those people over there are selling and throwing their money in the U.S. stock market. But I do think, the emerging markets, in India and Pakistan are two of them, is actually an interesting place. I don't think now, it is, but it is a place that I'm actually looking to put some of my money to work as an investment, to allocate a portion of my portfolio to emerging markets. Not now at this moment, but I do think probably next year it'll line up and be a good opportunity. What happened was last year, a lot of the countries that make up the emerging markets really took a huge hit when Trump started these tariffs to China is when it started. And if you remember, Turkey had a big collapse last August. The Egypt market fell last August, and India and Pakistan took tumbles too. And I'm not convinced any of these markets have truly bottomed yet. But they started to fall, last year. And, I think the U.S. stock market itself is relatively expensive to these other global markets, these emerging markets. And at some point, I think the U.S. dollar is going to go into a bear market, which will also make it be a reason to make it attractive to invest in these places. But some of them actually do have really low valuations. Russia has a cyclical VHS-P around 7, where the U.S. is over 30. Turkey is around 5. And Turkey and Russia are two places I'm really interested in investing in someday, because they have a lot of energy stocks and high dividend paying stocks, but Turkey is still going through their economic hardships, and it's a process likely to continue into next year. But the best buy points I find to try to figure out what's the next big thing going to be is when the U.S. stock market has one of these panic drops of 15 or 20%, and the VIX spikes up at least over 30, sometimes up to 40. And what you do when that happens is you look to see what's holding up, when the market is fallen, what is not fallen much, or actually gone up. And those things typically come out of that corrective process in the U.S. stock market to become the new leaders. So last year, when the U.S. stock market fell 20%, gold in the mining stocks actually went up, and that signaled that these would ultimately become great places to have your money. And today we can definitely say that that's the case. So that's a pattern I'm going to be on the lookout for. I don't think we're on the verge of a 20% drop at this moment, but who knows? Maybe in October we'll start to slide again. If not October, maybe next January. But whenever the next 15 to 20% drop does happen in the U.S. stock market, I'm going to examine all the exchange traded funds, all the countries that you're mentioning, India, Pakistan. I'll be looking at Turkey, be looking at Egypt, looking at Russia, Argentina even. Just look at all of them. And I'm going to see, there's some countries that when the next correction in the U.S. stock market happens, hold up, or even go up. I'm going to put money to work when that happens in those things, displaying good relative strength. I'm already got a portion of my money in gold, in mining stocks as we discussed. I think they're going to continue to do very well, even when that correction, whenever it happens, does happen, because the Federal Reserve is going to all of a sudden start to say, oh, we're going to lower rates even faster than you even imagined. That's going to put a light under precious metals, weaken the dollar more, and as a side effect of that, I think, make markets outside of the United States in the right countries, and I'm not exactly sure what they are yet, be great opportunities to be positioned in. So that's something I'm planning on keeping my eyes open to navigate and see whenever it unfolds.
Mike, thank you so much for chatting with us.
Thank you. Great talking with you.
My guest has been Mike Swanson, editor of WallStreetWindow.com. If you have any questions for Mike or any of our other guests, you can send them to info@HowStreet.com, our YouTube channel, Talk Digital Network. I'm Jim Goddard. Thank you for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of How Street Media Incorporated.